CMRX, and what it might be is called Morgan Stanley Consumer. Does everybody know what the consumer is? So we're going to take a look at the Morgan Stanley Consumer Index. These are the names in here. Abbott Labs. You got a different type. Most all listed stocks on the NYSE. Some high dividend yielders they like in here. You've got that GWW, that's 3.48. They move quite different in beta in this index or sector. Got McDonald's. Got PEP in here. These are some of the leaders in here that have very good volume at times. That is the names that are in the CMRX, Morgan Stanley Consumer Index. Now, having said that, I'm going to go to the Morgan Stanley retail chart, weekly sector. That's this one here. And what I want you MMTs to see is that you can see the consumer, that one reversal here. This was the all-time high. Reversal, counter rally, but look at that wick and look at that buyer come in. Now, on the retail side, the retail index, now let's take a look. I already showed you the names in the consumer one. Now, this is a retail index, and here are the names in the retail index. Okay? And you had a 3-week correction. But here are the names. Abercrombie & Fitch is in here. That's a good one we trade. That AutoZone is in here. That DDS, that's that Dillard's in here. Now, here is that Sears Holdings in here. Here is that Tiffany High retailer. Here's that TJ Maxx or whatever. They've been doing excellent. Now, these are retails. There's that Abercrombie & Fitch. That's that high retailer. That's the MVR.X. And it's called Morgan Stanley Retail. And we're looking at the consumer. Both weekly charts are up. The thing about it is that the amount of selling that we had tested a major support level, and this major reversal that started over here when we were calling these tops, this one here, that's where the weekly reversal starts in here. But a short-term neckline is where it breaks up the top of the bar all the way down, and then we exasperated into selling. That is a 100-week moving average that we got back above. And the thing about it is on this one here, you haven't gone into a weekly sell signal yet. You're very close. Like back in 2010, we started coming straight down in here and got down in here to weekly sell signals. And this particular trend for everyone to understand is that you went from a long-term bull way off of here in 010 to that high, once again to the top of the peak of that high, to the double top reversal right off over here. There's your 4-week rally in the retail. We traded that bottom. That was the first. That was at 1, 2, 3, 4 weeks. And retail is quite different than other indexes. But look at the consumer. The consumer Morgan Stanley weekly index, unlike this one here, it's gone into a weekly sell signal here. Okay, this one over here is about ready to go. The thing about it is consumer confidence was at all-time lows. You can see the amount of reversal from the top to that low right there. That's the high. You can see where the breakout to the high was back off of the 010 breakout handle and how it got up here. Once it did, we got into 2011, made our first low, first correction, would blow off top right in here. But then we corrected, and the rally was only a 1 week to a top with a major reversal. 1, 2, 3, 4, 5 straight weeks down in the Morgan Stanley Consumer Index. Now, the retail index, yes, it had the same tilt, but it exasperated itself all the way down here to major support levels. And the thing about it is, back to school is coming, and there are certain names in here. High net worth people keep still spending in the high net worth, more luxury type stores. And then again, there are some really good names in here. But moving forward, once this bottom up trend, we trade that. Look at that DDS, that Sears Holding. We make markets on them. That's how you got that big wick last Thursday and Friday right there. And they came into play. Not only that, you came right down here and hit that 200 week and you bounced in the consumer index. But both have the same type of patterns, let us not forget. And let us see one thing that, I'm sorry, there's a 3X bull that got put in here. the thing about it is the amount of buying Thursday and Friday at critical support levels within the correction dog days of August. You can see both indexes once again, and this is across the board. It was broad based on Thursday and Friday. The thing about it, MMTs, is how do I take those names now and trade from the bottom up? Bear reversal bottom up is called. Bear reversal bottom up. We spent all last week doing that. Bear and bull ETF supply, individual names apply to these indexes. Once again, it's about being heavily diversified in indexes, in leadership across the board. And before you know it, we have our own index called the SMF index built. So basically, lots of great opportunities. It's going to be how we trade up off that bottom. Anything that does go up and hit the higher highs will roll over, because there is a certain way to apply these trade management scenarios and such a reversal that we've had in these things, okay? From the swing high to that swing low, of course, and where it started. So it's going to be the bottom up, and if we start to break lower, we'll get into a sell signal. So we'll be looking at what kind of bear ETFs and what bull ETFs are related to the retail index and the consumer index, both of which are here right now. And it's great management and great trends throughout the year, but they're all broke. Every one of them are broke. Trade management, long, short, bear, bull, ETFs, along with options, calls, and puts, and various different names, different ways of trading things, matching up the leaders